You can give away a lot more crypto tax-free than you probably think. And the person you hand it to, in almost every normal case, they do not owe a single dollar on the gift itself. So if you've been sitting on some Bitcoin thinking about sending a chunk to your kid or your parents and bracing for a tax bomb, take a breath, because most of the fear is in the wrong place. Quick honest note before we start. This is education and not tax advice. I'm going to show you how the rules work so this finally makes sense in your head. For your specific situation, make sure to talk to a professional, and I will make that very easy at the end. Crypto is different from cash in one way that matters here. When you give someone cash, the cash is just cash. When you give someone a coin, you are also handing them its entire tax history. The price you bought it at travels with it. And that one detail is how people give somebody a tax bill without either person noticing until it's too late. So I'm gonna walk you through it in order. Who actually pays? The amount of crypto you can give away before most people even need to think about taxes. What happens when you go over the limit? And the crypto-only twist that catches almost everyone. I'm Alex. I co-founded TokenTax back in 2017. Now, I'm not gonna sit here and tell you that I'm the world's greatest tax accountant. What I am good at is connecting the dots and asking the right questions. I have watched a lot of people turn this exact question from a knot in their stomach into a 30-second decision. Stick with me to the end because the last part's what trips everyone up. Let's start with the question that scares people the most, because the answer relaxes everybody. If I give my brother some Ethereum, does he pay tax on it? The answer is no. Receiving a gift is not income. Nothing happens on their side the day it lands. That is how the IRS treats gifts. So if the receiver does not pay, who does? The giver. You. Gift tax, when it exists at all, is normally the giver's problem, never the receiver's. Now, keep that in mind as we go along in the video because it flips the whole thing around. People walk in worried about protecting the person getting the gift when the rules are pointed at the person giving it. So as we go through the numbers, think about them from a giver's perspective because that's where the reporting rules usually start. And spoiler, that amount is big. So here is the number that answers the title. In 2026, you can give any one person up to $19,000 of crypto a year with no federal gift tax and no gift tax form to file. Not for them, not for you, $19,000 per person per year. They call it the annual exclusion and it resets every January. And notice I said per person. This is not a single bucket. You can give $19,000 to your son, another $19,000 to your daughter, another to a friend, all in the same year, all clean. Each person is their own $19,000 limit. Now, here is the nice surprise if you're married. You and your spouse each get your own $19,000 exclusion. So together, a married couple can give up to $38,000 of crypto to the same person in 1 year before getting into gift tax territory. Quick heads up though, crossing that annual number and owing gift tax are not the same thing. Most people never pay gift tax at all, which is what we are going to cover next. For a huge number of people, that is the end of the story. You wanted to send your kids some crypto for a down payment or maybe a wedding. If it's under those limits, you're done. But some of you are thinking bigger than 19 grand. So let's talk about what happens when you actually cross that line because it's nowhere near as scary as it might sound. Say you want to give your daughter $50,000 in crypto this year. You are over the $19,000 line by 31 grand. And this is where most people assume a tax bill is coming. The form is called Form 709. And the most important thing about it is this. Filing it does not mean you owe anything. Filing is reporting. What that form does is decrement something called your lifetime exemption. And that exemption is enormous. In 2026, it sits at $15 million per person. So going $31,000 over the annual limit does not mean a check to the IRS. It means using up $30,000 of a $15 million lifetime allowance. Unless you plan to give away more than $50 million across your entire life, you will almost certainly never pay the actual gift tax. You just file the form so the IRS can keep the running tally. Everything up to now is true for cash, gold, stocks, whatever. This next part is the reason a crypto gift is its own animal, and it slips past even careful people. When you give someone crypto, you don't just give them the coins. You give them the price that you bought it at. The tax world calls that the cost basis. And with a gift, it travels. Your basis becomes their basis. Watch what that does in real numbers. Let's say you bought one Bitcoin years ago for $5,000 and today is worth $100,000. You gift that whole coin to your son. That's a super generous gift, and under everything we covered, there is no tax the day you hand it over. But for tax purposes, he doesn't start with a $100,000 cost basis. He inherits your $5,000 cost basis. So if he sells that Bitcoin for $100,000, the IRS sees a $95,000 gain. He doesn't just receive the coin, he receives the tax history that comes with it. There is one more wrinkle. If the coin is worth less than you paid for it when you give it away, the rules get more complicated. You do not need to memorize the details. Just know that gifting a coin that has gone down in value has its own set of rules, and it is one of the easiest places for people to get the math wrong. The hard part of gifting crypto is not the gift tax. We just showed you that barely touches normal people. The hard part is the record that rides along with the tokens. The price you paid, the date you bought it, what was it worth the day that you gave it away. Whoever eventually sells that coin is going to need that information. Maybe next year, maybe 10 years from now. The gift is the easy part. So the paperwork that follows the coin around is the real game. Now let's talk about the mistake that actually costs people money. Picture your son a few years down the road. He goes to sell that Bitcoin that you gave him. His accountant asks the obvious question: what was the cost basis? And he has no idea. You never wrote it down. The coin moved from an exchange that has since gone defunct, sent to your wallet, and then eventually sent to him. And the brutal reality is this: if you cannot prove the original cost basis, the IRS position is that your basis is $0. So when he sells that coin for $100,000, he's not taxed on a $95,000 gain. He is taxed on the entire $100,000. Because as far as the records show, it costs him nothing. A missing spreadsheet turned a generous gift into a much bigger tax bill, purely because nobody tracked one number. So I specifically remember when we had a client that was gifted Bitcoin from a family member years earlier. They just received the coins on Coinbase. Nobody thought twice about it. The client told me that they couldn't contact their family member anymore, so it made everything harder. The gift was documented, the cost basis wasn't. Suddenly, the question wasn't how much tax do I owe? It was how do we prove what these originally cost? Ultimately, they had to file with zero basis. And it cuts the other way too. How long you held the coin travels with it. Prove you held it a long time, and the person you gave it to gets better long-term tax treatment. Can't prove it? Then they pay more. So in crypto, the records are not bookkeeping. The records are the tax. And look, this is where I can actually be useful to you, because tracking that basis across wallets and exchanges is what my team does all day. You can keep those records for yourself, every buy price, every date, every transfer, or let people who untangle crypto records for a living pull all the cost basis and keep the paper trail clean, so nobody gets a zero basis surprise later. And that's effectively what token tax is for. There's a link in the description. Either way, stick with me because I want to show you 2 moves that let you give away unlimited amounts with no gift tax, plus what a clean handoff actually looks like. The first is tuition. If you pay someone's school directly, that is not even counted as a gift. No limit, no form, no exemption used up. You could pay $100,000 of your niece's college tuition and it does not touch any of these numbers. The catch is the word directly. The money has to go straight to the institution, not her to pass along. The second is medical bills. Same idea. Pay a hospital or provider directly for someone's care. No dollar limit, no gift tax, same catch. It has to go directly to the provider. Pay the school, pay the doctor, and you have moved real money for someone you love without using a cent of your allowance. One more thing people get nervous about, which is worth 30 seconds to discuss. If someone cashes crypto out and deposits more than $10,000 in cash at a bank, the bank files a report. That is not a tax form and not a sign you did anything wrong. It is a banking rule. The one mistake to avoid is chopping a big amount into smaller deposits to dodge that report. That is called structuring, and that is the thing that actually creates a problem. If it is above board, move it in the open and stop worrying. So what does doing this right look like? It is simpler than you would guess, and it would come down to 3 numbers. Step 1, before you gift the coin, write down what you originally paid for it and the date you bought it. That is the cost basis traveling with the coin. The single number people skip, the one that bites years later. Step 2, know what the coin is worth on the day that you give it. That tells you whether you are under the annual number, over it, or into the Form 709 territory. And it is the number you need if the coin is underwater. Step 3, hand all of that to the person you are gifting in writing. Maybe just a short note. Here's the coin, here's what I paid, here's the date, here's what it is worth today. Now when they sell next month or in 10 years, they have everything their accountant will ask for, and nobody is rebuilding a basis from thin air. And especially, you won't need to pay a $0 basis. The machine under crypto taxes is genuinely complicated, but the gifting part comes down to those 3 numbers. The gift was never the hard part. Keeping the record straight is, and now you know which record to keep. So look at where you are now. The person receiving the gift does not pay. You can give $19,000 per person every year, $38,000 as a couple, and with zero paperwork. Going over that means filing a form, not paying a tax bill, because the lifetime exemption is $15 million. And the one thing that makes crypto different, the coin carries its cost basis to whoever you give it to. So the real work is the record. The only thing left to decide is who keeps that record. Do it yourself, and you now know exactly which numbers matter and why. Or hand the messy part to people who track crypto cost basis for a living, which is the whole reason token tax exists. The link is in the description. And if you want to understand how the broader crypto tax landscape is changing, especially the new reporting rules that are starting to affect investors, I have another video called The New Rules of Crypto Tax. Go watch that one next, and I'll see you over there.